IFRS 16 Leases, subsequent measurement of the right of use asset in the books of the lessee. Please refer to IFRS 16 paragraph 29 to 35. The right of use asset can be measured subsequently using one of the following accounting models: the cost model of IAS 16 or the revaluation model of IAS 16. Under the revaluation model, the lessee can only apply this model if the right of use asset relates to a class of PPE to which the revaluation model is already applied by the lessee, and the lessee elects this model. So therefore, the lessee can still choose not to apply the revaluation model, even if the right of use asset relates to a class of PPE to which the revaluation model is applied. However, if the lessee does not own any assets in the same class of assets to which the right of use asset relates, then the right of use asset will have to be accounted for using the cost model. Under the cost model, the carrying amount would be calculated as the cost, which is determined in line with the requirements of IFRS 16, less accumulated depreciation and accumulated impairment losses. That carrying amount could possibly have to be adjusted for any remeasurement of the lease liability. That is an IFRS 16 requirement that you'll find in paragraph 36C. We will, however, not address any remeasurements of the lease liability. How would you calculate depreciation? In terms of IAS 16, property, plant and equipment, if the lease transfers ownership or the lease contains an option to purchase the asset at the end of the lease term that the lessee will exercise with reasonable certainty, in other words, the asset will become the property of the lessee. Ownership will transfer. Then you depreciate this asset from commencement date to the end of the useful life of the underlying asset. So then you do not consider the lease term. Otherwise, if ownership does not transfer, you depreciate this underlying asset from commencement date to the earlier of the end of the useful life of the right of use asset or the end of the lease term. So if this asset, for instance, have a useful life of 10 years, but the lease term is only 5 years and ownership does not transfer to the lessee, you'll use the 5 years as the period over which you calculate depreciation. Impairment of the underlying asset is determined by applying the principles contained in IAS 36, impairment of assets. Let's have a look at class example 11 to illustrate the subsequent measurement of the right of use asset. Again, we use the same information as what we used in class example 6. We will now illustrate how to calculate the subsequent measurement of the asset. In class example 6, we illustrated how to calculate the cost of the right of use asset. The following information applies. Commencement date was 1 January 2016. Rocco Limited was the lessee who entered into a lease agreement with Mimo Limited, the lessor, to lease a new office building from Mimo for a non-cancelable period of 20 years. So my lease term was 20 years. The lease does not include any options to extend or terminate the lease, and ownership of the office building does not transfer to Rocco Limited at the end of the lease term. The contract is a lease per IFRS 16. In class example 6, we calculated the initial measurement of the right of use asset as 16,539,498. The following additional information applies. The financial reporting date of Rocco is 31st December. Rocco Limited does not own any other office building. This office building is accounted for in accordance with the cost model. The revaluation model will therefore not be available. In terms of IFRS 16, depreciation is calculated in accordance with the straight line method over the estimated useful life of the office building. The estimated useful life of the office building is 25 years. Let's prepare the journal entries in the books of Rocco Limited for the subsequent measurement of the right of use asset in accordance with IFRS 16. Please make sure that you understand the difference between initial measurement and subsequent measurement. Initial measurement is on commencement date. You need to determine the cost. Subsequent measurement is to get to a carrying amount, so you need to deduct depreciation and possible impairment losses. Here is your suggested solution. The date of the journal, always important, is at the end of the year. We recognize depreciation for that year. The debit leg of this entry will be depreciation. But please note, this is different from what you've seen under IFRS 16. Instead of having a credit to accumulated depreciation, we take the credit directly to the right of use asset office building account. The depreciation is then calculated by taking your cost, which is determined in terms of IFRS 16, and then the main issue here is to determine how many years will you use for your straight line depreciation. Ownership does not transfer, therefore you have to use the shortest of lease term or useful life. The useful life of the office building is 25 years, but the lease term is only 20 years. So that's why your depreciation is calculated over 20 years. Please refer to some of the comments at the end of this example. I refer you to the last bullet. Please note that the depreciation charge is accounted for directly against the carrying amount of the right of the use asset and is not accounted for in a separate general ledger account called accumulated depreciation. The reason we do this is when you look at the disclosure requirements under IFRS 16. It only requires that the carrying amount at the beginning of the year must be reconciled to the carrying amount at the end of the year. No mention is made that this carrying amount must be presented as the difference between the gross carrying amount and accumulated depreciation. It would thus seem that the accounting for depreciation can be made directly against the carrying amount of the right of use asset. Please use the right of use asset account when you account for the depreciation charge for the year.